Hey traders, welcome to this week's Staying Sharp with COT Data Insights. I'm Phil Mobs, and in this video, I'll break down the key market setups I'm watching based on CFTC positioning data, macro catalyst, and price action. If you follow my newsletter, this will bring it all together visually. So, every trader wants the big move, but the ones who last know when to wait. And right now, we're in a transition zone where we have the quarterly futures expiry, which is due for the June 16th. We have the FOMC decision, which is due June 18th. And until then, we should expect noise. All right, so moving into this event, well, from my end here, no swing buyers and just focus on intraday price action while you wait and see for the real move in the directional phase after the expiry, and then we see the CFTC data releasing to see how they are all positioned. So in this week, we'll be looking across the indices, the currencies, Bitcoin, and crude oil. So let's go into it. Before we march on NQ, I want to review what was important for us last week, which for me in my own space here, it was majorly just discipline. Remember, we were interested in the short buyers after the close of Tuesday, and Wednesday during the ADP release, it was a non-mover in the indices space. Technically, it's been very interesting to see how NQ has been fighting off bad news, which began on Monday when the ISM data print came out. With the ISM result that came out on Monday, we saw that NQ was very, very good at beating up the poor numbers that came out. We had about 48.5, but NQ closed the day very bullish on that day, even on bearish data. Already that gave a hint of the strong bullish sentiment in the market. But anyways, the timing was to wait till Tuesday close and see if there's any weakness in price. And we highlighted this fair value gap here on the 4 hours as a place of interest if we want to see any weakness on this data front, anything from Tuesday close to go lower. And right into Wednesday, there was actually nothing of that sort. And we used the NFP protocol. Thursday was a day to stay out. And interesting enough, that was the day Elon and Trump had their drama on social media, and that precipitated this downfall. On Friday was non-farm payroll. I mean, you're smart enough to wait for non-farm payroll to print first and start looking for entry from 10 a.m. So it was a pure price action day. So nothing indicating short buyers here based off of what we were expecting on the COT data, and therefore no trade was triggered. Like I said in my introduction to the main thing for this week, honestly, is going to be for the FOMC decision coming up in 2 weeks from now, and also the quarterly expiry next Monday, not this Monday, but the next Monday, and that would align well with what we are expecting to see during the third week. And in the third week, the protocol stands the same. You have to wait till the Tuesday close, which is going to be the Thursday and the Friday, for the best price action. That is the main information for NQ. We had some very interesting. I had some very interesting thoughts about ES, even on my newsletter for the week too. If you take a look at it, it was the fact that even as we see bullishness on NQ, right, we see aggressive bullish commitment by the non-commercials on NQ. On ES, that is not follow through. If you take a look here, you see how that this has all been cold, right? This dark blue here tells me they are not very aggressive, while the red color tells me they are aggressive. So here we don't see that overcommitment, which is a foretell of a much gradual and painful move upside. But again, it becomes interesting for me since the 13th of May when I highlighted here about the increase in the net positioning by the commercials. So it's been something I wanted to actually see how long do we keep this net bullish position for, and it's been persistent for over 4 weeks now, and that's very interesting for me to see. And to blend that up with the fact that we have contract expiry coming in, we also have the FOMC decisions. Like, okay, this is actually good to highlight. And when I compare ES and NQ together, frankly, ES is looking more bullish than NQ. And from that standpoint, I truly want to wait and see if we will see a follow through in the bullishness on NQ. So we're already seeing signs from price action as to how NQ is able to fight off bad news and continue pressing higher. So these are all recipe for higher price action. However, the cut data tells me they're overcommitted. I'm seeing a 3-month high in the commitment of shorts from the commercial, from the non-commercial. So it's something I am actually watching out for. Anyways, this new week, going into this new week, it's really about the intraday price action. I've always found CPI week to be very good for intraday price action as compared to swinging it, right? And that's going to be the focus for this week. The next pair of interest is Euro USD, and Euro USD is quite interesting because in my notes from going from the video, I talked about how that there were certain levels I wanted Euro USD to clear first, and I see the reaction from there. Do we have an appetite to clear out this high here? You see that was cleared. Do we have the appetite to clear this other high, which is the consequent encroachment? This is just an ICT terminology. The consequent encroachment of this week here. That was my interest to see. We didn't get quite there, but this pump here was precipitated after the rate cut decision, and you see it was all faded back again. It's quite interesting to see, and I'm still going to be waiting patiently for this contract expiry, for the FOMC meeting, and to really know how to be positioned. But this contract expiry for me remains key to be well positioned into how everything should play out. Moving on, and we can see also too that if we look at what did the market do from Monday to Friday here, from Monday to Friday, basically we didn't really go anywhere. This was in line with our observation that from a positioning perspective and seeing the observation we've been making for weeks, we consider that the market may remain range bound or prone to sharp intraday reversals. So in the Euro USD, we saw them just being a range bound, right? So best way to take advantage of this was to be in those intraday moves. However, the yen was quite an interesting one. So what did we see happen in the yen? All right, let me use the USD JPY. So for the yen, it was an interesting week for sure. On Tuesday, we had a trigger to go long on Tuesday. However, on Wednesday, when the ADP news data was released, that was sharply bearish for UJ. Over here, I think a long entry was triggered here. We rode it to the close of the day. However, upon the release of the ADP news, this candle, confidence was out in terms of seeing that this would continue higher. And this is also in line with the fact that we called for the fact that they can be sharp intraday reversals, and that was exactly what we saw. And I had no interest with the mental energy to withstand this thing going down. No, like just get out, break even, and then get out. And interesting enough, on Thursday we had no interest in the market, but we can see how the market had actually been able to close above this candle over here, the 930 candle here, and that was suggestive of the fact that we'll just continue higher. And lo and behold, the week actually closed out bullish, which was in line with our anticipation, and it still remains the case that we would want to see bullish price action. I love what I see here on UJ, and I'm still holding on to this idea of UJ going for longs. And again, Tuesday close will be interesting enough to see if we see any follow through to continue higher, but that remains the data. There's nothing else again I could actually say regarding this other than the fact that you wait for Tuesday close, look for suggestion that we are going to go higher. So we just stay nimble for the intraday opportunities, but also on the Tuesday close, this is actually going to be interesting to see if we can see opportunities to continue the long bias on UJ. Next is going to be Bitcoin from the chart, other than the fact that the positioning support the fact that we might continue higher. We've seen multiple shifts in market structure. I remembered back in April 27 when I made my comment, I made mention of the fact that we wanted 89,000, I believe back then, a shift, a close above 89,000 was important for bullish price action. And since then, when we had that shift in 89,000, we've seen price continue higher. And it continues to be the case that now we see evidence that the commercials are also interested in this going long. The big question for me now is the fact that do we come to the equilibrium of this range from here to here before we continue higher, or do we just continue from here? Again, I know that we have the FOMC meeting. I know we have some. I think the contract expiry for this is going to be 25th of May, so it's still a long time ago. It's still a long time away. So the FOMC meeting for me, I think, is the deciding factor. You just have to wait till after that FOMC meeting. However, intraday price action too could be interesting, but I don't intraday trade Bitcoin. But it was good for me to highlight the fact that we see an increase in the bullish commitment by the commercials, even onto the 1 year high, and also an increased commitment of short by the non-commercials. This is a recipe for disaster for the non-commercials because we are on the side of the commercials, and this should continue to grind price higher. Yeah. Moving on, energies. The energies is there's interest in energies for me only because of the fact that we have a persisting bullish commitment and also a all-time high in the open interest around 2 million. This is the highest we've seen in a year, and for me that makes for an interesting data set. Why? We have an increase in commitment to continue increase in supply of the barrel of oil by OPEC Plus, coupled with the fact that we have contract expiry on the 17th of June. So I keep asking myself, could we get as high as one standard deviation of the range that we find here and then find like a topping process that just goes down? Because I believe we've seen something similar to that. We've seen something of that sort here where we had the contract expiry into the May contract, and we saw a sharp shift in market structure here, which precipitated a retest of the week of this level here, right? So I'm also interested to see also too, do we have any willingness to go as high as this level here or as high as here and then form a topping process? It's an interesting study for me to watch and see. So I actually remain interested to see how it plays out. So this is basically what happened last week. Nothing interesting other than the fact that we had one trade that was triggered on UJ. We had no trade on EU. We had no trade on NQ. So pretty much a quiet one. And for the new week to come, the focus is really just going to be on the CPI print, the PPI print, and that should be interesting for us to observe. Let me go one more time back to the NQ. For NQ, really, it is the fact that we have continuously seen persistent overcommitment by the non-commercials, and for me, since the 13th of May till now, there still isn't any excitement I see in all of these data point that has been pushing price higher. So I would love to see how the contract expiry shows up, and that would be interesting for me to use that to reposition myself. That's it for this week's COT Outlook. If you found this helpful, like and subscribe and drop a comment if you are watching any of these setups too. If you want a deep dive, the full write-up is in my Substack, link in the description. Stay nimble, stay sharp, and see you next week.